screen. You can also reach out to us on WhatsApp, but I do urge you to pick up your phone and call us on the numbers that's right available to you at the moment. Now, today we're being joined by G. Chokalingam, founder and MD at Economics Research, here to answer all your fundamental queries. Welcome, Chokalingam. And on the technical front, we would have Vikas Jain, Head of Research at Reliance Securities. Welcome, Vikas. Thank you so much, both of you, for giving us your time. Let's head straight into our first query. Mohan from Kanpur has written to us on WhatsApp. He currently holds 41 shares of Syrma Technologies at 603 rupees a piece and is asking whether he should hold or sell. Now, Syrma Technologies was down 3.13% in trade today and is also Mohan is also sitting at a loss of about 6,000 rupees from this investment. I would like to take this query to you, Vikas, first, just to understand the technicals of this particular stock. Do you think there could be a trend reversal seen in the way the stock is currently performing anytime soon?
Look at the stock volatility has been pretty high compared to in the EMS space. No doubt it has given good amount of returns in calendar year 2024. But since then it is drifting downwards. So the stock has made some formidable bottom near the 320, 330 levels and witnessed some amount of recovery. So it is in the formation zone of near to 430, 435. So we can continue to hold, but we will have to maintain a straight stop of around 430 levels on the downside. Because if 430 is being breached, then we could expect the second round of sell-off from the current levels. So 430 should be the stop loss to be maintained and can continue to ride the position for a higher target of near to 510 over the next few weeks.
Okay, understood. And you know, Mr. Chokalingam, just talking about the electronic manufacturing space where Syrma Technologies hails from, how do you see the space performing at the moment, and do you think Syrma Technologies would be the right bet at this given juncture?
Yeah, just now I'm looking at the fundamentals. Extremely stretched in valuation. If you see last December quarter, the growth in top line is not exorbitant enough to justify the exorbitant PE multiple the company enjoys. So probably if stock corrects maybe another 10%, then one can consider Syrma Technologies.
Okay, got it. And now we have Ramachandra calling us from Andhra Pradesh. Hi, Ramachandra. Good evening. Hello?
Hello?
Hi, Ramachandra. Can you please lower down the volume of your television?
Okay.
Yes. Okay. And do we have you now?
Yes, please.
Yes. Please go ahead with your question.
Ola Electricals, regarding Ola Electricals.
Okay.
I have purchased 2,000 shares at the rate of 51 rupees.
Okay.
At the current market, can I add more or can I wait? Technicals, please.
Okay, understood. And did you say 50 rupees or 51?
50 rupees.
50 rupees. Okay, got it.
Yes,
Okay, understood. So, Ramachandra from Andhra Pradesh currently holds 2,000 shares of Ola Electric at 50 rupees a piece and is asking for a 1-year view on this. The stock is now trading around 48 and was down about 2.5% in trade today. Mr. Chokalingam, I'll direct this question to you. Ola Electric has been surrounded by a plethora of negative news recently and a lot of things fundamentally going haywire for the company. Do you think Ola Electric, although hailing from the EV space, which is sort of a big focus of the government, is the right bet at this given point of time, just because of how fundamentally the company has been in a mega turmoil?
Fundamentally, I believe that the stock can correct even quite significantly from this level also. There are a lot of players struggling to turn around this EV two-wheeler business, including Ola, and competition is getting intensified. And in recent times, the year-on-year growth also has started moderating. So in this environment, I would say that Ola Electric possibly suitable only for risk-taking traders, but definitely not for investors who depend solely on the fundamentals.
Okay. So maybe for traders from a technical standpoint, it might be a good idea, but from a fundamental perspective, Not so much. Okay, let's go across to our next query, which is a WhatsApp query. Chakrapani, if I'm pronouncing your name right, Chakrapani has written to us from Bangalore. He currently holds 3,000 shares of DBL from the last 1.5 years. Dilip Buildcon, I'm so sorry, Dilip Buildcon from the last 1.5 years. He's asking whether he should hold or sell. Vikas, I'd like to get your technical expertise on this particular counter. Do you think, Chakrapani should continue to hold his 300 shares, or can he add more shares at this given juncture?
Setup remains pretty bleak. If you look at the whole infrastructure sector moved up in 2024, the stock did not even attempt to cross the 2-year, 3-year high of 550, 580 odd levels. So we believe the stock is under continuous pressure. No doubt the sell-off was being pretty sharp into the month of March, near to the lows of 270, 280. But we believe it's better to exit from this stock and invest into some other better infra names played through, where it would make up the given opportunity what it has been lost through.
Okay. Thank you so much for that view. And now we have Dheeraj. He's calling us from Guntur. Hi, Dheeraj. Good evening.
Good evening, ma'am.
Please ask your question.
My query is regarding Samvardhana Motherson.
Okay.
So I'm holding 1,410 shares of Samvardhana Motherson, which I bought it today.
Mm-hmm.
As I heard that is there is going to be positive news regarding auto ancillaries in the coming days. So at 135.5 rupees.
Okay.
So can I hold it for the next 2 months, or should I shift to some other counters? Actually, my one more small doubt is, which are the counters which are possessing high upside from current levels, ma'am? Like particular segment also is one more query I have.
Okay, in the auto ancillary space?
Not on the auto ancillary, in the entire stock market at current levels, which are attractive. Is it the power space or the IT space, or auto ancillaries, or some NBFCs, finance, or...
I understood your question, Dheeraj. I understood.
Yes,
let's try and first address your query on Samvardhana Motherson. So, Dheeraj from Guntur currently holds 1,410 shares, which he bought today, of Samvardhana Motherson at 135.5 rupees a piece. Now, the stock has been significantly falling, consistently falling, in fact, from October of 2024. But hailing from the auto ancillary space, Dheeraj's rationale was that the space has seen quite amount of traction and is also sort of looking forward to a strong growth as well. Mr. Chokalingam, I would like to get your view on Samvardhana Motherson. Do you think our viewer Dheeraj has taken the right decision by entering into this particular stock today?
Even after such a massive fall, it still trades around 25-26 PE on FY25, which I believe was slightly stressed considering the trade war, which is also focused on the automobile, and this company has access to global markets. But still, considering the fact that it has been doing extremely well in the past in terms of growth, and stock has fallen more than 40%, one can hold it. 10-15% return is possible, but I don't think it's a great, attractive value play considering the trade war.
Okay. So, Mr. Chokalingam, then my follow-up question to you would be, anybody who is interested in betting on auto ancillary, because it's such an attractive space at the end of the day, if not Samvardhana Motherson, which other counter would you suggest to enter?
Auto component, one can think of only the tire industry, because entire automobile sector, we saw this morning media report that year-on-year sales growth is only just 3%, entire auto sector. So the component also would suffer, but still why I suggest tires segment is that the industry gets 3/4 of sales from the replacement market, only maximum around 30-33% from the OEM. So replacement market remains robust, and not only that, the oil price has crashed to more than 30%. So perhaps entire auto component space, this is the only segment which gives. So one can consider after a few days or after a few weeks, once this border tension settles down, then only I would suggest aggressive new investment into these stocks.
Okay. And very quickly, Mr. Chokalingam, I would not want to negate the fact that Dheeraj also asked your talk recommendations of top 3 to 4 sectors currently. So definitely a huge basket, so I would not push you to give me names. But if possible, could you give us top 3 sectors that one could explore in the current market environment?
Yeah, so topmost would be banks. I mean, today is a very unusual day. A lot of PSU banks have fallen, which is surprising. The banking sector is one of the few sectors which is still growing in strong double digit. It's very difficult to see many sectors growing strong double digit, and followed by the telecom sector, which also has got a lot of opportunities for growth. And these are the two sectors I would say, and therefore, I would recommend stock like SBI, HDFC Bank, Bank of Maharashtra in the banking. Uh, in the telecom, one can, if there is any small fall, also one can consider Airtel. And these are the two I would recommend. And also, the cable industry. Yes, we are aware that big industrial houses are entering, but which is in the price. So stock like a Finolex cable, which has already corrected 40-45%. They are also would be the beneficiary of steep crash in the oil prices. Some of the inputs are derivative of oil, and also the metal prices are correcting because of the global growth slowdown. So I would add Finolex cable also to this list.
Okay. Thank you so much for that holistic perspective on how the markets currently are. Now we have Amol joining us on the phone line from Noida. Hi Amol, good evening.
Hi, good evening.
Please ask your question, Amol.
Actually, yeah, I have 70 shares of Indian Hotel at 765 rupees.
Okay.
And I need the short-term view, like where should I put a stop loss and what should be the near-term target.
Okay.
And one follow-up query is that today's fall in all the indices was just a profit booking activity, or it is trend reversal because of this geopolitical tension and tomorrow's mock drill planned by Indian government?
Okay. So we'll divide the question in two parts. First, I would like to address your query on Indian Hotels. Now, Indian Hotels reported a very strong set of numbers. Its bottom line grew by about 25%. It has also announced to invest about 1,200 odd crore rupees in asset upgrades. So from that perspective, looks good, but let's see how technically it's faring. And Vikas, I'd like to get your perspective here. It has been trading in a range-bound manner since November of 2024. When do you think there could be a dramatic shift in the way it is currently trading?
The stock has been in a strong outperformer for calendar year 2024 if you look at. But since 2025, the stock is making continuously lower tops on the technical charts. And today now it will be broken with sharp volumes. So it has respected its 200-day average twice or thrice over the last 1 year. 200-day average is placed near to 725, 727, which should be the stop loss for the same. Because if that is being breached, then the long-term trend would turn negative for the Navy. So we should keep a stop of around 725, 727 on the downside. With market recovery, broader market recovery, the stock would see some amount of upward. So 785, 790 should be the first band of resistance area where he can exit if he wishes to.
780 to 790 being the resistance point for IHCL. And Mr. Chokalingam, Amol also asked us about the recent sell-off. In fact, today a lot of counters did see a substantial amount of sell-off in the markets, and he's asking whether this is around the mock drill, around the news of the mock drill that would happen tomorrow nationwide, or is there any other fundamental news playing in?
Yeah, in my understanding, there is no other fundamental reason to panic on the Indian market because both China and US started showing some flexibility because they understood how difficult it would be for their own economies, the impact of the trade war. And oil price crashed almost 31-32% from 52-week high, which is a big positive for Indian market and economy. And so I believe that it has to do solely with the tension on the border, because even for me, person like me, it is something new. This war after 71, in 71 we had a market cap of less than 1 lakh crore, and even GDP was less than 1 lakh crore, and 71 now there has been a dramatic structural changes in terms of build up in the economy, build up in the market. and also in terms of build-up in the nuclear arsenal. So even person like me is getting quite scared. Not for life, what would happen for the economies if there is to be a really big war. I think that is a fear which has prevented a lot of retail investors from, buying. In fact, many resorted to selling, I believe. Otherwise, last 8 days, the large caps are remaining quite strong, and there is no panic selling by any institutions. So it is only the fear factor, especially among the retail investors, which has caused this fall today.
Okay, thank you so much for that perspective, Mr. Chokalingam, on how the current geopolitical environment is shaped, and maybe or maybe not we could see an influence of it on the stock market. Now we have Madhu calling us from Mysuru. Hi Madhu, good evening.
Hi ma'am.
Please ask your question.
Ma'am, Uno Minda stock name 300 quantity, average price 950, 3 months back buy ma'am, consolidation ma'am, Schiller Road ma'am.
Okay, got it. Vikas, I'll take this question to you. Madhu currently holds 300 shares of Uno Minda at an average price of 950, and he's incurred a loss of about 12,000 rupees through this investment. Now, if I'm not wrong, since June of 2024, Uno Minda has been very restrictive in the kind of price band it has been moving in. What does your technical outlook on the stock say? Is it going to see any substantial amount of change in the stock price anytime soon?
The stock has witnessed good amount of bounce over the past few weeks in the current whole process of recovery of last 2.5 months what we have witnessed. And it still has the potential to move higher further near to 985 to 1000 odd rupees, which is the 200-day average. So we can continue to hold on. No doubt there is some amount of sell-off and resistance area at current levels, but we believe it should surpass the same, and it should move higher near to 985 to 1000 in the next few weeks, so we can continue to hold.
Okay, understood. And now we have Snigdha calling us from Hyderabad. Hi Snigdha, good evening.
Hi, hello everyone. So
Hi.
I purchased 600 shares of CG Power at 628 rupees in the morning.
Okay.
So the result was bad. So I just want to know if I hold it for another 2 months or 3 months. So would I get anything up to 700 or something like that?
Okay, so it's a very technical purchase that you've made over there. I think Vikas would be the best person to answer. So Snigdha Vikas from Hyderabad currently holds 600 shares of CG Power at 628 rupees a piece. And she's asking, her simple question to you is that, do you think the stock price would move towards 700 and supersede that level in the next couple of months?
So in terms of CG Power, the structure looks pretty promising, but it is always better to avoid trading on the result day because you don't know how the fund manager or the larger quantity investor would reacting to the results. So it's always a better way to avoid trading on the result day and take an action post the results when they come. Results have been out and the action has been happened. So the stock is in structural bull trend. She can continue to hold on. We believe it's 8,700 what the potential target what she has been looking for would be possible over the next few months. So she can continue to maintain and hold.
Okay, got it. And we have another caller joining us from Visakhapatnam. Harish is on the phone line. Hi Harish, good evening.
Good evening, madam.
Please ask your query.
I'm having 1800 shares of Titagarh wagon at the rate of 933. Today the share was around 700.
Correct. 699.
Yeah. Can I average this rate?
Since when do you hold these shares, Harish?
Around 5 to 6 months.
Okay, 5 to 6 months. Got it. And you're asking whether or not you can continue to hold these 1,800 shares?
Yeah.
Okay, got it. Mr. Chokalingam, Harish from Visakhapatnam currently holds 1,800 shares of Titagarh wagons at 933 rupees a piece, and as he rightly mentioned, the stock was trading around 700 bucks this morning. How do you fundamentally see Titagarh wagons, because Harish is now sitting at a massive loss of about 4 lakh rupees. What should Harish do with his positions?
Definitely, even in FY26, the company may not perform very well. because we all know that for FY26, the budget allocation for railways has not gone up substantially. It's quite muted, the growth, year-on-year growth in the capex for railways. However, to be fair to the stock has already crashed a lot. And secondly, if you go by the past experience, this company was able to always secure decent order and perform well on the stock market as well, as and when the railway sector was doing well. So there is a possibility of this company doing well in terms of business in FY27. So therefore, I would give a hold rating for medium to long term. In case the stock falls further, one can even buy for a minimum period of 1 to 2 years.
Okay, okay. And Vikas, I'm just curious to understand, if you look at the daily time frame in which the stock has been trading, the fashion of the stock in which it has been moving, in fact. So our viewer bought them at 930 odd levels, and it has really fallen by over 200 points, and it is currently at 699. When do you see a potential upside which could sort of exceed the levels at which our viewer bought them?
The stock just peaked near 1800 levels in the month of July 2020. Since then, it has been on a continuous corrective action. No doubt the stocks try to form some amount of bottom-up formation. Volatility have increased into the name post the inclusion of the Indo basket from March 2025 series. So some amount of inclusion has been happened and volatility have increased. But we believe it's a good point to hold. No point in selling at current levels. We expect the stock to surpass near 780 to 800 first potential target over the next 2 months. If that is being crossed, then we could expect 880 to 900, which is its purchase price over the next 1 to 2 quarters.
Okay, got it. And now we have Ravi calling us from Hyderabad. Hi Ravi, good evening.
Yeah, very good evening.
Please ask your question, Ravi.
Yeah, my query is regarding CDSL.
Okay.
So at what price is it good time to buy CDSL, and I can hold for 1 year, 1.5 years?
Okay, okay, got it. And any particular reason why you're interested in CDSL, Ravi?
Just one of my friends suggested this, since he's holding since long back, and he also made good profits. So he has good knowledge in stock market.
Okay.
So I want to go with that.
Okay, okay. Let's see what our experts have to say about your friend's suggestion, Ravi.
Okay.
Mr. Chokalingam, Ravi has been suggested to enter CDSL, and CDSL did not post healthy numbers recently, and the street was quite disappointed, and therefore the kind of dip that we saw in the stock came through. How do you view CDSL, and do you think it would be a good idea to enter the stock at this given juncture?
I believe, I may be wrong, I believe that it is one of the excellent stocks for medium to long term, because the capital market story in India is perennially a growth story. And this caters to capital market. It provides services of depositories, which we all know. And still, the March quarter result was quite bad. One has to understand the fact that the very unusual thing to the stock market happened in Jan-March quarter. From the peak of 484 lakh crore market cap in September 2024, in February, the market lost about 100 lakh crore, almost 1/3 of India's GDP in nominal term. That never happened in the past. So that is a kind of stress or crisis we saw in the stock market. Obviously, all capital market intermediaries were affected very badly in Jan-March. So therefore, one should not take the Jan-March performance as mark of its performance. All these capital market intermediaries will come back to growth story as and when the stock market becomes normal, stable, and it starts growing linear way. So I'm pretty confident. So, as I mentioned, one can wait for a few weeks or a few days to see the tension settle down. Then this would be one of the greatest stocks to buy in my strong conviction.
Okay, okay. Interesting view over there, Chokalingam. And now we have another caller. Shiv Kumar is joining us on the phone line from Bengaluru. Hi, Shiv Kumar. Good evening.
Hello. Good evening, madam.
Good evening. Please ask your question.
Yeah, I hold 102 shares of LIC of India.
Okay.
From IPO days at around 895 rupees
okay.
a piece. and it is not showing any movement either downwards or even upwards. Though the financial sectors are doing very well in our country nowadays. But is there any future for LIC of India as it is venturing even into health sector now or health insurance now? Or should I switch on to some other shares like Coforge or Bharti Airtel or some others?
Got it. So, Mr. Chokalingam, I'll direct this question to you, and then Vikas, I'd like to get your technical expertise on how LIC is performing as well. So, speaking about LIC, Mr. Chokalingam, firstly, Shiv Kumar currently holds 102 shares at 902 rupees a piece, and the stock is now trading around 784 odd levels. In fact, it dipped from 1,188 odd levels from July of 2024 to where it is currently trading. So it has seen a substantial, downside. Would you recommend any viewer, not only Shiv Kumar who called us at the moment, but would you recommend anybody to enter LIC? Because sure, financials is a strong story. LIC is a beneficiary, a forefront company. Do you think LIC is currently, trading at a discounted price, or is there something wrong?
For short-term investor, there is a possibility of 10, even 20% upside, because the stock has crashed a lot, and tactically, yes, it will keep growing. I mean, nominal term, it will keep growing, and it can bounce, if not 40, 50, at least 15, 20%. So to that extent, short-term, medium-term investors can hold it and hope for some recovery. But if somebody has to, take a call on a serious note for medium to long term, I would not recommend LIC, because, it used to be a monopoly. Now it has become a highly competitive, and a lot of these competitors have, even the banking platform as a part of the group. And they have been more efficient also in pushing their products very aggressively. So therefore, it is going to be quite tough for LIC in terms of competition from the private sector in the long term. So I would recommend, to look at a stock like M&M, for that matter, any other banking stock like HDFC Bank or SBI Bank. So these are the one which are assuring you strong growth and no threat from serious competition at all. So that is what I would prefer.
Okay, so Shiv Kumar, I think if you are currently holding your position, so it's not a bad idea, but for anybody who wants to enter fresh, Chokalingam ji recommends that you must try and not enter LIC and maybe just invest in HDFC Bank or SBI, which are sort of giving you or could give you better returns. And Vikas, very quickly, I'd like to get your technical expertise on this one as well. Now, Shiv Kumar bought these 102 shares at 900 odd levels, and the stock is now trading around 780 levels, right? So, number one, do you see a short-term bounce happening anytime soon, and what would your target price be?
Well, short-term bounce has been due to the names, because if you look at all the insurance stocks have turned positive the year ended, with strong outperformance remaining through into SBI Life and HDFC Life. So LIC could also see some amount of strong positive momentum. The breakout is on the charts. So maybe 910, 920, which is the 200-day average, should be the next probable target and the buying price for Mr. Shiv Kumar. So we can continue to hold on. We believe its purchase price should come somewhere near during the next 3 to 4 months.
Okay, got it. So it's a hold on LIC, and viewers, with that, we'll have to slip into a short break, but keep sending in your queries on WhatsApp and call in. We will be right back for Ask Profit only on NDTV Profit.
Apollo Tyres, now there's a buzz of a positive corporate development related to related to its European operations or European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and there's dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm.
and welcome back to Ask Profit only on NDTV Profit. Today we're being joined by Chokalingam on the fundamentals and Vikas Jain on the technicals. So do pick up your phones and call us on the numbers flashing on your screen to get the best investment advice on any stock related queries that you might have. We are now being joined by a caller, Balaji from Tamil Nadu. Hi Balaji, good evening.
Hi. Hi.
Please ask your question.
Yeah, I'm holding IRFC for long term. Actually, I bought at 189 for 750 stocks.
Okay.
So, do you recommend to hold the stock long term or average out? What is your opinion on it?
Okay, okay. And since when do you hold these 750 shares of IRFC?
Yeah.
Since when? How long has it been?
Last 8 months.
8 months. Okay.
Yeah, 8 to 9 months I'm holding.
Okay, okay, understood. Because from a technical standpoint, Balaji firstly holds 750 shares of IRFC at 200 rupees a piece. The stock has fallen down to 120, so a loss of 80 rupees per share that Balaji is currently incurring. Would you recommend Balaji to continue holding his 750 shares or exit the counter, and how?
Continue to hold on, no doubt about it. The stock has not been so great performer over the last 6 to 7 months, but the fall has been pretty sharp from those 240 to 50 odd levels to 120. And the stock is making some amount of higher bottom formation on the weekly charts for the last few months. So we can continue to hold. Maybe 200 could be a far-fetched price to achieve over the next 6 to 9 months, but 145 to 150 should be the ideal opportunity. It should be expected over the next 1 to 2 quarters.
Okay. And Mr. Chokalingam, getting your view on IRFC again. I know just a few minutes ago you spoke about a railway counter, and you're not too optimistic about the railway space just because of the subdued concentration or focus that it is currently getting. But how does IRFC look to you? Because and also, do you think its PE ratio currently has a fair valuation?
Yeah, it is still stretched despite a massive fall in the stock price. Appropriately, if you can see in terms of price to book value, it's still stretched. But definitely, after seeing such a massive fall and also opportunity for this, company in the long term, I would suggest hold. If investors can consider minimum 1 year investment horizon, then it is good to hold. It will definitely come back to strong growth path, and price to book value will also shrink to a large extent in a matter of 1 to 2 years. So therefore, medium to long term investment, I would give a hold recommendation on IRFC.
Okay, so it's a hold on IRFC, and now we're being joined by Dharmesh from Gujarat. Hi Dharmesh, good evening.
Good evening, madam.
Please ask your question, Dharmesh.
Madam, I hold 100 shares of Thyrocare Technologies.
Okay.
At the average price of 665.
Okay.
I hold this company share since last 6 or 7 years.
Okay. Okay.
Yeah. So still I can hold another 2 or 3 years. So what is the future prospect of the company? I want to know.
Sure. Mr. Chokalingam, Dharmesh from Gujarat currently holds 100 shares of Thyrocare Technologies. He bought them at 665 a couple of years ago, and he is willing to hold them for the next 2-3 years as well. What would your suggestion to Dharmesh be with regards to his current shares, and how does the future prospect of the company look like?
Yeah, slightly stretched in valuation, but definitely it's a good to hold for long term. If you look at FY25 results, it's been really fabulous. After growing the revenue base substantially, still it is able to grow revenue by 20% year on year in FY25, and PBDIT, it has grown about 37%. It's really amazing. And also, I have personally experienced that they are able to offer at very highly competitive prices their services. So yes, it's a very good stock to hold for medium to long term.
Okay. So while it is, as Chokalingam said, that it may be a good stock to hold on from a medium to long term, Vikas, I'd like to get a technical perspective here on this as well, because Thyrocare has seen a massive fall from its very high levels. Back in, say, June 2021, it was trading around 1,400 odd levels, and it has now fallen to about 800 odd levels, right? So, and also if you look at the amount of profit that Dharmesh has made, he was able to make, say, a 25,000 amount of profit in the span of 6 years from this investment. So just from a technical perspective, when do you think Thyrocare could go back to those expensive levels, or maybe higher levels at which it was trading a couple of years back? And do you think it is a profitable stock to stay invested in?
Different opinion what Mr. Chothalingam said. I believe this stock has witnessed good amount of move from the lows of 680, 600 odd levels, and now it's into the higher price band. So some amount of consolidation and price correction cannot be ruled out. So 1,000 rupees what it tested through, then it went all the way down to 450, 460 odd levels, and now again it is moved to 920. So I would recommend the investor to exit and put profit into the name and invest the proceeds into some other sector or some other stocks to invest through.
Okay, thanks for that. And now we are joined by Jagdish calling from Amravati. Hi Jagdish, good evening.
Hi ma'am, I have IRB Infra 5,000 shares at the 59 and I have 1 year perspective. Should I exit or should I hold it?
Okay, one short question Jagdish, when did you buy these shares?
On February ma'am.
Okay, in the month of February. Okay, 2nd of February. Got it. Vikas, very quickly, how does IRB infrastructure look to you? Now, our viewer Jagdish from Amravati currently holds 5,000 shares at 59 rupees a piece. The stock is trading around 44 rupees a piece at the moment, and also saw a dip of about 3.5% today.
Continue to hold. No doubt it will take time to recover to the mean, but the stock has the potential to move higher. So because it has made a good bottom of formation near to 38, 39 levels, witness a quick recovery to 50, 52, and now again declined 50% retracement of the previous move. So good support area near to 44, 45 fill in the gap levels. So the stock has the potential to move higher, but maybe not 59, but at least 50 to 51 again to repurchase will the recent high. So 50, 51 should be possible. You can continue to hold on.
Okay, got it. And now we're being joined by Tirumurti from Bengaluru. Hi Tirumurti, good evening.
Good evening, madam.
Please ask your question.
Madam, I want to specifically ask Mr. Chothalingam.
Okay.
Actually, it's among all the analysts, I found he is a very knowledgeable and very intellectual and a very genuine person whom I can compliment forever. I have seen many people whom they are suggesting, but very, very intellectual and very, very competent, I would say him. And many of his stocks also I have followed because of the market condition which did not perform and never matter for that. But the kind of analyst knowledge he has, it's very, very genuine. Wow. I bought a BSC share at around the price of 750. Now I am sitting with the 780. I am sitting with the profit of this. So I would like to ask, where they have announced the bonus, whether I can wait for bonus or in the bonus I can accumulate more and more. I want to have it for I think 5 to 10 years of this. But my compliment, sir, may God give you long life.
Wow, okay, so I think I should take a moment and applaud you, Chothalingam ji.
I have seen all the analysts also. I keep seeing it. I am a doctor by profession. I keep seeing in the recent past.
Mr. Chothalingam, do you want to say anything to our viewer for that compliment?
Really touched. Thank you very much. That's what gives me more energy to continue to service public investors.
Definitely. And I'll just summarize his query just for our viewers' benefits.
Yeah.
He currently holds 100 shares of BSC at 780 rupees a piece, and he's asking your suggestion on his position. Now, just a bit, BSC reported a 5-time jump in its net profit in Q4 of FY25, thereby beating analyst estimates. And it has also given Tirumurti a great amount of profit. He's sitting on a profit of about 5.5 lakh rupees. So, Mr. Chothalingam, what would your advice to Tirumurti be? Should he wait to also, take the advantage of the bonus issue, or should he sell his position and book his profits?
Yeah. Now, I initiated this stock at around 200 rupees adjusted for bonus. So I don't have heart to give a buy call after the stock has gone up almost 30 times. In fact, I made a mistake of giving a sell call around 1200 after making six-fold return. But from there again, it has gone up by 5 times. Now it looks too costly to me. I mean, it is much costlier than the leader NSE. If you go by the the price quoted for NSE in the unlisted space. But this gentleman also said that he wants to wait for 10 years. So that is why I am a bit worried in giving a straight away sell call, particularly to him, because as I said earlier also for CDSL, capital market story is going to be a very long-term story. But I would not suggest buy at this level because the relative valuations are not at all comfortable. And also, if market tension continues, the market would be very weak. And the Jan-March results may not be great for this company, which is the case with many capital market related intermediaries. So at best, one can hold with a mindset of 5 to 10 years, but definitely it's not among the buy list for me.
Okay, so that's an interesting view on PSC, Mr. Chokalingam. Now we're being joined by Prithviraj from Andhra Pradesh. Hi, Prithviraj.
Hi.
Please ask your question. Good evening.
So my query is about Techno Electric.
Okay.
I own 30 shares of Techno Electric at the average price of 1063. I want to know the fundamentals of this company to hold it for long term.
Okay.
And I want to know if what are the good levels to enter, to accumulate more.
Okay.
In this.
Got it. Okay. Vikas, Prithviraj from Andhra Pradesh currently holds 30 shares of Techno Electric at 1,063 rupees a piece. The stock is now trading around 1,030 and did see a rise of about 10% in the past 1 month. In fact, it also recently announced investing $1 billion in data centers, and it is also eyeing a capacity expansion of 250 megawatts by 2030. From these fundamental perspectives, do you think the stock price could have a technical push, and is the current juncture the right entry point to add more units of this share?
Continue to hold for what he's been holding through, but to add through, he should wait for some amount of broader market stock decline. Because the stock has witnessed shorter amount of move from the 780 to 1000, 1230, 1240 high, which is made. And then it's been declined. The stock doesn't have so great volumes. No doubt the last few days, candle chart shows some amount of consolidation. So anything near to 960, 980 should be a good entry point, which is a 50% retracement of the previous move from 600 to 1250. So 930 to 980 should be a good entry point to enter today.
Okay, got it. And now we have Rajesh calling us from Noida. Hi Rajesh, good evening.
Good evening.
What's your question today?
I had 1,500 shares of Electrosteel Castings.
Okay.
At the rate of 115.
Okay.
So I asked from Chokalingam that I can add more and my holding period is 1 year.
Okay, understood. Mr. Chokalingam, Rajesh from Noida currently holds 1,500 shares of Electrosteel Casting at 115 rupees a piece. The stock is now trading around 92 odd levels, and it has also seen consistent fall since September of 2024 when it was trading around 225 odd levels. Would you suggest our viewer Rajesh to add more units of Electrosteel Casting, and he is perhaps wanting to invest in this just for the next 1 year?
It's a great management, excellent historical performance. Stock also crashed a lot, but I would still say that wait for March results, and then one can consider, because steel industry is going through tough time, and these problems are getting entire pack. I mean, entire pack related to steel sector. Problems are getting aggravated because of the tariff war also. The sentiment also quite bad for the sector. So I would give a hold recommendation, and I would prefer to analyze March results, and then only I would form a view whether one can buy or just hold.
Okay, so wait and watch until March results unfold. And now we're being joined by Ram from Tamil Nadu. Hi Ram, good evening.
Yeah, hi everyone, good evening.
Hi Ram, please ask your question.
Yeah, so I'm looking for Praj Industries. So I'm okay to invest 15 to 20,000 in this stock. So I want to know how strong is this. Just now the Q4 results has been given. So there is a strong decline in this stock. So is this the right time to consider this stock? So it is in my bucket for a long time.
Okay, before I take this question to our experts, Ram, I would want to know why is Praj Industries in your bucket list?
Yeah, it is a monopoly stock and it's performing well for the last 2-3 years. And in this market condition, like it has been fallen, it has been corrected a huge. So my friends also invested in this and they have made a good profit in a couple of years back. So I'm just bullish on this stock. I want to know how technically strong is this.
Okay.
Yeah.
Okay. Got it.
I'm looking for 1 to 2 years. I am okay to hold it for the next 1 to 2 years.
Understood. Understood. Vikas, Ram from Tamil Nadu wants to know if this is the right time to enter Praj Industries, and he also calls it a monopoly in its space. Give us your technical view, because the stock has been extremely volatile and has seen significant amount of drop in its share price since January of 2025.
Completely agree with it. Its fall has been pretty sharp, but now it's near to its 200-week average, which is a good support area. Usually, these large outperformers really bounce from the 200-week average. Even the RSI is at the lower part of the range of near to 30-35. So, and it has witnessed bounce back from these levels. So, it's a good entry point to enter to into the name. And if he has a view of 1 year, we believe the stock he should make some around any returns near to 30-35%. Anything near to 680 to 720 should be the potential target. So a good point to enter the name.
Okay, so it's a good point to enter Praj Industries. Now we have another caller, Karthik, calling us from Bengaluru. Hi Karthik, good evening.
Hi, good evening.
Please ask your question.
My name is Karthik Sahu.
Okay.
I'm calling from Bengaluru. I hold a share by name Deepak Nitrite in an average of 2559.
Okay.
Right now my loss is 40,000. And I would like to know whether I should invest more to bring the average down, or I should hold for next 3 to 4 months.
Got it. Mr. Chokalingam, Karthik from Bengaluru currently holds 70 shares of Deepak Nitrite at 2,559 rupees a piece. The stock has fallen about 1,955, and as a consequence of that, Karthik is currently sitting on a loss of about 40,000 rupees. What would your suggestion to Karthik be on Deepak Nitrite, since he wants to continue holding for the next couple of months as well?
The stock likely to stagnate for 1 year. Tactically, maybe 10% upside is possible because it's a part of good management. It has got a great historical track record. But last 2 years has been quite tough for the company in terms of margin going down. And we saw the margin contraction in the last few quarters as well. I don't see that changing. And also, because of the tariff war, I believe firmly that the chemical sector would be under more pressure, because the Chinese product would flood. If not Indian market, outside India, it is going to flood, and the margin pressure would continue. And therefore, my view is that it is most likely to stagnate around this level, plus or minus 10% for next 1 year.
Okay, got it. So it's likely to stagnate in the next 1 year. For the next 1 year is the suggestion Chokalingam is giving you. Now we have Raju calling us from Bengaluru. Hi Raju, good evening.
Hi, good evening.
Please ask your question, Raju.
My query is about Ramkrishna Forgings.
Okay.
I own 100 shares at the price of 630.
Okay.
I want to know the fundamentals of this company. I want to hold this for next 3 years. So I want to know the fundamentals. This stock is falling from last week or so.
Sure,
daily.
yeah.
So I want to know, can I hold it or not for long term?
Okay, got it. Vikas, I'll take this one to you. So Raju from Bengaluru currently holds 100 shares of Ramkrishna Forgings at 630 rupees a piece. The stock is now trading around 596, and Raju wants to hold for the next couple of years as well. But in recent times itself, the stock has seen two periods of sharp correction, one in January and the other in the month of March. How do you see RK Forgings performing in the next 2-3 years, and do you see any chances of a good profit being made?
Continue to hold on. As you said that the stock has seen some amount of volatility. It has declined from the highs of around 1100 to 580, 570 odd levels and then bounced back. Recently, the company announced some amount of inventory loss which came in through in the result day, but still then the stock has not declined, so which is a good sign in terms of it. And plus, it is making a higher bottom structure on the weekly charts and it's near to support zone. So risk reward ratio is favorable. You can continue to hold on. The first potential target near to be 710 to 720. It should be the probable target over the next 1 quarter.
Okay, understood. And now we have Setu again. Lots of calls from Bengaluru. Setu is again calling us from Bengaluru. Hi Setu, good evening. Setu? I think the TV volume is on for Setu. I will take up his query anyway. So Setu currently holds 200 shares of Reliance at 1,253 rupees a piece, and Reliance Industries is now trading around 1,421. Now, I don't know whether or not he wants to hold or sell, but I'll take your fundamental as well as technical outlook on Reliance Industries. Mr. Chokalingam, how did this time's results look to you for Reliance Industries, and would you recommend our viewer or any viewer of NDTV Profit to continue holding their shares if they're invested in Reliance?
Yeah, its performance has been muted for several quarters, but I would still give a hold call because the share of oil and gas consistently reducing in the total profit, and there is unlocking possibility from digital services. GST are also doing well, and then FMCG, it is reported that it has crossed nearly 11,000 crore of turnover build-up. So all this would augur well for re-rating of the stock, and also oil and gas is historically cyclical, though it is not doing well. The cyclical upswing is also possible in the medium term. So considering all this, I would give a hold. If there is any decline, I would give a buy recommendation on the stock.
Okay, got it. And Vikas, a quick question to you. Reliance Industries is slowly seen to be creeping towards its September 24 levels. When do you think it will be able to completely surpass those levels, and what would your target price for the next couple of months or say 1 year be?
The stock is in bullish trend. It has surpassed its 200-day average with strong volumes. But the recent up move from those 1120, 1130 odd levels to 1460, 1480. So retest of a possibility could be expected near to 1380, which is the 200-day average. But we believe the stock will do pretty well and it surpass its target. So 1620, 1680 should be the potential targets which comes through over the next 6 months.
Got it. And now very quickly, let's talk to Sanjay from New Delhi. Hi Sanjay, good evening.
Yeah.
Please ask your question.
I'm Sanjay from New Delhi.
Yes, Sanjay.
I had 40 shares of Uno Minda.
Okay.
What are the fundamentals for this stock? And purchase it at 725.
Okay, 725. Okay, got it. Mr. Chokalingam, what is your fundamental perspective on Anupam Rasayan? Sanjay from New Delhi currently holds 460 shares at 725 rupees a piece.
I'm extremely sorry, I have not updated the stock in the recent times, so I am not able to give view.
Not an issue. Vikas, would you be able to give us your technical outlook on this one?
Yeah. So the stock has broken out from its long-term moving averages and broken with strong volumes. So price participation has been pretty strong. So we believe the stock should do pretty well. On the higher side, 940, 980 should be the first potential target. If that is being surpassed, then 1050 could also be possible.
Okay, got it. And with that, Vikas and Mr. Chokalingam, thank you so much for giving us your time today and answering all the queries of our viewers. And viewers, a quick note to you, you can continue to write to us on WhatsApp as well as call in on the numbers available to you. We're live on Ask Profit in the morning as well as in the evening. And also stay tuned to NDTV Profit as there's a lot more lined up for you right on the other side.
Apollo Tyres, now there's a buzz of a positive corporate development related to related to its European operations or European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm. The last 1 month, if you see, the share prices of Genzol Engineering has fallen more than 58%.
Why are the rating firms calling the debt payments as default?
We have two credible credit rating agencies on March 4th coming and downgrading the stock to D.
Statements are consistently being proven wrong, and transactions are being taken place which are different from what they were originally pictured to be.
The company claimed it would roll out 6,400 electric vehicles. But what it has rolled out is a shocking scam. Funds meant for the project were funneled allegedly back to the promoters, the Jaggi brothers. What did the money buy? Not EVs, of course, but a lavish flat in Gurgaon's luxurious DLF Carmelias.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start.
India and the UK finalize a landmark FTA, marking a major step in strengthening bilateral economic ties. Alongside the FTA, both nations have also signed the Double Contribution Convention Agreement, aimed at streamlining social security contributions for professionals working across borders. The Nifty and Sensex end lower, reversing gains from the past two sessions. All sectoral indices end in the red except Nifty Auto, which jumped for the second straight day. States and union territories are conducting civil defense drills to strengthen emergency preparedness. Mumbai will hold a mock drill at 4 p.m. tomorrow, while blackout drills in Bihar will take place from 7 p.m. to simulate wartime readiness. Authorities urge citizens not to panic as sirens, coordinated rehearsals and emergency responses will be carried out. India issues a notice to Yemen for a large-scale exercise along the southern section of its border with Pakistan. The drills scheduled for tomorrow may lead to flight suspensions near airports close to the border. While sources say India is now pushing for a changed stance with 0 for 0 tariffs on auto components, steel and pharma, Commerce Ministry Piyush Goyal assures that the conversation with the US is going fabulously well. Yes Bank clarifies reports of Sumitomo Mitsui Banking Co's potential stake acquisition. states that discussions are preliminary and speculative. Nifty Pharma falls as Trump's drug manufacturing push spurs investor concerns. The executive order will focus on reducing the time it takes to approve pharmaceutical plants in the country. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. This is where we bring you the latest in markets as well as national and international news. On to our top focus this evening. India and the UK have successfully concluded a landmark free trade agreement and a double taxation convention, marking a major milestone in their strategic partnership. Prime Minister Narendra Modi, after discussions with UK Prime Minister Keir Starmer, highlighted that these agreements will boost trade investment, job creation and innovation across both economies. He also expressed enthusiasm for welcoming the Prime Minister to India soon. Let's bring in my colleague Rishabh for further insights on the implications of this deal.
Right, India and the UK have concluded negotiations for what is a very, very historic and a mutually beneficial free trade agreement today. This comes after the Prime Minister Narendra Modi himself announced this deal coming to a fruition. Now coming down to the brass tacks of it, this deal has come to fruition after about 3 years of negotiations, lots of back and forth. Commerce Minister Piyush Goyal just returned from London, and which is where it was hoped that the deal was announced, but it has now been announced today, along with a visit from the UK Prime Minister Keir Starmer. Now let's come back to what lies actually and what sort of sectors now stand to boost from this UK FTA. Firstly, the most important of it is the fact that 99% of Indian exports have now been given zero tariffs from the UK. So from ranging from anywhere to 5 to 20% tariffs that the UK applied on Indian products, 99% of these lines have now been exempted, which means that export opportunities have opened up for labor-intensive sectors such as textiles, marine products, leather, footwear, sports goods, toys, gems and jewelries, and other industrial sectors that are very, very important for India's manufacturing ecosystem, such as engineering goods, auto parts and engines, as well as organic chemicals. What we're also seeing is that this could mean a boost to trade in services such as IT and affiliated services. We're also seeing a boost to professional services, for example, lawyers and chartered accountants that want to now practice in the UK now also stand to benefit because they are also a part of this free trade agreement. We're also seeing that greater mobility has been agreed upon for young Indian professionals as well as Indian students. What we're also seeing is that under the double contribution convention agreement, which is dubbed as the Social Security Agreement, Indian workers now stand to benefit because they now have a 3-year exemption